What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to take a macro level view at the stock market and we're going to do detailed technical analysis. We'll look at the S&P 500, the NASDAQ 100, the Dow Jones, the Russell 2000, the VIX, and Bitcoin. First up, we'll take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, we'll take a look at a weekly chart of the SPX. So remember that every candlestick on this chart represents one entire week's worth of price action. Now I want to start out with a zoomed out view of this bull market coming off of the March 2020 crash. This is exactly where we are to this day. Now the first thing I want you to pay attention to is note that we started going into a bull market of August in 2020. If you were trading last year in August, you should remember how strong that bull rally was coming out of that March 2020 low, and we did get a blow off top and that did trigger a correction. Going into the election, we had a lot of volatility, and ever since the election, this bull market has taken off and has never looked back. Technically speaking, in the year 2021, the S&P 500 has not even had a true stock market correction defined by a pullback of 5% or more. We've only had about a 4% pullback from the all-time highs before this bull rally continues to go higher. If you look at these moving averages, you can see that they've been stacked to the bull side since August of 2020, and we have never lost the bullish trend since. We've had pullbacks, but the bulls buy the dip and the trend continues to go higher. So the first thing I want you to know is you should not bother trying to call a top when you have a bull market this strong. Trying to call a top is a loser's game, and eventually somebody will be right. But by the time somebody is right, think about all of the times that they were incorrect. It's just not how you trade the stock market, and being subjective and trying to guess where the top is never going to be a winning strategy. Just go with the technicals and stay objective, and that's what I want to show you with this zoomed out view of the S&P 500. This bull market is extremely strong and there is no signs that it's rolling over, as you can tell from this week's candlestick. We closed well above this positive sloping 5 EMA, and we still have all of these moving averages stacked to the bull side, so there's no way you can look at this chart and say that this bull market is ending. It's a very strong trend with very strong bullish price action, and that should be all I need to say to prove my point that this is a strong bull market. So when you hear me say things like don't try to call a top and don't short this bull market, I'm trying to tell you that the odds are heavily stacked against you because of how strong this market is to the upside. So the next price targets I have from a macro level view are SPX levels of 45.34, 46.05, and 46.76. Could one of these levels potentially call a top or lead to a correction? Of course they could, but all we know is that those are going to be resistance levels and they could cause a pullback, and then we could continue to go higher. So pay attention to these price targets, but don't just assume that one of these levels has to be the top. We could continue to see this bull market extend well above those targets, so just play the stock market day by day and week by week, and don't try to call a top. There's just no point in trying to call a top with how strong this market really is. Now, if we do start seeing a correction, and we do get a correction this year, we could pull back to the 20 simple moving average on this weekly chart, which is currently sitting at 4,300. Another very strong support level that we could see the SPX pull back to will be right around 41.55. So if we do get a correction, it's possible we do come back down to these levels, and if that correction turns into something more, we could come down to the weekly 50 EMA or the support trendline breakouts. Remember, ever since we broke out of these resistance trend lines, we never back tested that breakout as support. So it is possible, if the stock market does start to get ugly, that we come all the way back to SPX levels of 3,800 or possibly even 3,650. So pay attention to those support trend lines if we do see the stock market roll over. But as long as the stock market is looking this strong and this bullish, there's no reason to have your eyes way down here at these lower support levels. We need to see a significant rollover and confirmation breakdown in the bull trend before we even consider the fact that the stock market is going through a major correction. So for the time being, our eyes should be up towards these next price targets because we still have the strong bull trend and we still have price action well above the weekly 5 EMA. So watch those 3 price targets in the upcoming weeks and look for potential pullbacks from those levels. On the monthly chart, we can also see just how strong this bull market is, with only having 3 red candlesticks since the March 2020 crash, meaning out of all of the months since we've crashed, we've only had 3 red months. This is an extremely strong bull market, and if that doesn't prove my point, I don't think anything else possibly could. As you can tell, there is a lot of green on this chart, which means almost every single month the stock market continues to go higher. So if you're trying to short the market for any prolonged periods of time, the odds are heavily stacked against you, and you're most likely going to continue to lose money trying to short this market. So this monthly chart shows you how strong this bull market is, and it doesn't matter if you think it should be rational or not. The market can stay irrational much longer than you could say solvent, so you're much better off trading in the direction of the trend. On the monthly Bollinger Bands, you can see there's plenty of upside, so that does mean we could go all the way up to my price target in the 4670s. So there's going to be no resistance from the monthly Bollinger Bands. So respect this bull trend because it's very strong on the weekly and monthly charts, and that does mean this is a secular bull market with a very strong macro trend. Jumping over to the bear bull survey, we can see that we're at 39.6% bulls, 27.5% neutral, and 33% bears. Overall, this is still a Goldilocks ratio because we still have a pretty even split across the board. Remember, the more people that are in cash and the more people trying to short this market increases the likelihood this market can continue to go higher. If we see too many bulls and we start getting ratios near 50% on the bull camp, that could mean that all the cash is already in the market and we're starting to see greed, and greed could signal a market top. But right now we're just not seeing that, so there's nothing from the sentiment report that's going to tell us that we need to be a contrarian at this time because it's still an equal split between the three camps. And more than likely, we will continue to see more greed as we continue to climb higher. So wait for those extreme greed readings in this market because that will be the time to be a lot more cautious and prepare for a potential correction. Jumping over to the NDX weekly chart, again, we could see a very bullish week with a very green candle, and we could see price action well above the 5 EMA with the very strong bull trend. So the NDX did break through that price target at 15,272, which means our next price target is up here at 15,985. From this week's close to that next price target is another 3.5% to the upside. Again, with a very strong bull trend, it's very likely that we're getting to that target. To the downside, we have the 20 simple moving average at 14,380, and the 50 EMA is down here right around 13,300. Remember, we're not going to see those support levels unless we see the market rolling over, and this is a very strong bull market that doesn't even look like it's ready to roll over at this time. So know those support levels, but don't expect to see them while we have such a strong bull trend. Point your eyes to the sky when you're looking for that next price target. As you can tell, that price target is very close to a nice round number of 16,000. So it is possible the NDX is shooting for that $16,000 level. So watch that level closely, and as long as we have this bullish trend, we're not getting any resistance from the upper Bollinger Bands, and it's likely the price action will continue to climb higher. On the monthly chart of the NDX, you see the same story. Strong bullish price action with a strong bullish trend and plenty of upside room in the monthly Bollinger Band. The monthly Bollinger Band goes above our price target, which does prove the fact that this bull market can continue to go higher, well above and beyond my price targets. So watch those levels, but don't just assume that that has to be the top in the market. On the Dow Jones, we also see bullish price action above the weekly 5 EMA, and we still have the weekly full bull trend. The Bollinger Bands are squeezing on the Dow Jones, which does mean we can see an expansion of volatility in the upcoming weeks. So on the Dow Jones, we still have upside room in the upper Bollinger Bands, and those Bollinger Bands will continue to expand, allowing the Dow Jones to go even higher. It's possible at this rate the Dow Jones could continue to climb higher because we still have the bullish price action and the bullish trend. All three indices are very strongly bullish, which does tell us we're in a secular bull market, and when all of the indices are rallying higher together in a strong bull market, that's when you know you're in a very strong bull market. That's the real deal. We have no weak sectors at this point. And the Dow Jones, the S&P 500, and the NASDAQ 100 are all rallying higher. So again, this is not a bull market you want to try to call a top in, and just trade in the direction of the trend until we see something shifting in the technicals. On the monthly chart of the Dow, we see the same story with the bullish price action and the extremely strong bullish trend. We see a lot of green on this monthly chart with just a few red candlesticks in between, which tells you the odds are against you if you're trying to short the Dow Jones. As long as the bull market is this strong, you just have to remain in the direction of the trend until we see something shifting. In the Russell 2000 weekly chart, we had a very bullish candlestick and we're back above all the moving averages. The Russell 2000 does not have the full bull trend like we see in the three indices. We do see a nice bullish engulfing candlestick on the weekly chart, so that could start to change as we rally higher, but right now there's no bull trend or bear trend on the Russell. It's been consolidating sideways and we are in a very tight Bollinger Band squeeze, so we could see an expansion of volatility in the very near future if we can start to see those Bollinger Bands starting to expand. You could see we do need to break out above Russell 2000 levels of about 2350 to really get this bull market going, and to the downside we could still break down below about 2160 and we could see a flush in the Russell. But right now, this is a very bullish price action candle for the week. So it does look like the bulls are trying to take back over and potentially see the Russell 2000 breaking out. On the monthly chart of the Russell 2000, you can see the price action still above that 5 EMA, and we still do have a very strong bull trend on the monthly chart. So the monthly chart is more macro level than the weekly, and we're still in a very strong bull market on the monthly chart. So overall, if you're looking at the Russell 2000 on smaller time frames, you have to give benefit of the doubt to the bulls, because on the macro level scale, we're still in a strong bull market for the Russell. So jumping back over to the weekly after looking at this monthly chart and looking at this weekly bullish candle, you can definitely see a lot of reasons to believe that the Russell 2000 is going to try to break out to the upside. That doesn't mean it won't have pullbacks day to day, but in a macro level scale, it does look like the Russell 2000 is going to attempt to break out. So watch that resistance level on the Russell right around 2350, because that will be a very strong resistance level. And if we can break above that level, we could start to see more bullish traction. On the VIX weekly chart, we could see a very bearish candle with the VIX getting crushed to the downside, closing below all the moving averages yet again. Now on the VIX weekly chart, we can definitely see some evidence of some higher lows, even though we are forming lower highs. So the VIX is in a consolidation wedge, and this wedge does end near the end of the year, right around November of 2021. So it is possible we see the VIX continuing to ping pong around between support and resistance, and then near the end of the year, we're either going to see a huge volatile spike, or we're going to officially see the VIX getting crushed, coming all the way back down to those low levels of 12 that we haven't seen since the March 2020 crash. So the time is coming in the near future where we're going to see a huge volatility spike, or we're going to see a continuation of this secular bull market as we continue to climb even higher. Remember, on the VIX, you need to see a spike above 18.2 and 20 to see that volatility in that pullback, and then a close above 23 to start seeing a stock market correction. To the downside, if the VIX stays below 18.2 and continues to head towards 14, you're going to see brand new all-time highs in this bull market. So the VIX is a very important indicator because it does represent fear in the market, and low fear does go hand in hand with new all-time highs, and an elevated VIX is a more fearful market that could be a lot more volatile. On the Bitcoin weekly chart, we can see that we did regain the full bull trend. All of the moving averages are officially stacked to the full bull side in Bitcoin yet again. Now this is a very bullish development because we did come off of that very critical support level at 30,000, and we did see a very strong bounce off of that level. Anytime you get to a critical support level like 30K on Bitcoin and you hold up above that level, that is always a bullish indication that represents a lot of buyers at that level. We've had a lot of green candlesticks coming out of that level, which does tell us it was a very impulsive bounce off support. So if you know anything about Elliott Wave, you want to see impulsive moves to tell you that the bull trend is still intact. Well, that's exactly what we saw with Bitcoin. So that's a very bullish development while we regain the full bull trend. We do have a resistance at 51,000, and above that, we could start flirting back to the 60K levels and brand new all-time highs. I have levels on Bitcoin that take us all the way up to 75,000, and we could continue to extend even beyond that. So right now, if you're looking at the weekly chart of Bitcoin, it does look extremely bullish, with downside support levels at 45,000 and 43,000. So as long as Bitcoin has this bullish trend, you do want to buy it at support because it does look like it wants to get to brand new all-time highs this year. On the monthly chart of Bitcoin, we can see that we never did lose the full bull trend, and the price action stayed above that 13 monthly EMA the entire time. So the monthly chart does look extremely bullish, and coming off of a giant correction or almost even a crash, you can assume that the bull trend will continue to the upside. The 5 EMA is back to a positive slope, and the price action is well above the 5 monthly EMA. So a strong bull trend with strong bullish price action, Bitcoin is looking like it's in the real deal bull market. So if we can break out above 51,000, Bitcoin will look extremely bullish to go to brand new all-time highs in the rest of the year. So jumping back over to the S&P 500, if there's anything you take away from this episode, it's that I want you to understand this is a very strong bull market. When I do my day-to-day technical analysis, sometimes it's very easy to forget how strong this bull market is and where it's coming from. As long as the trend is this strong, the bulls are going to continue to buy the dip, and it's going to be a bull market that does not die easily. I can't stress that enough, because if you understand how strong this bull market is, you're more than likely not going to continue to try to short it. So if you're shorting this bull market, I already know that you're having a bad time, so you don't need to continue to hear me say it. But if there's anything you learn from this video, it's to stop trying to short this bull market. Wait until the market rolls over and shows signs of weakness, and then you will have the direction of the trend in your favor for a short trade. This is still a strong bull market, and it does look like it wants to continue to go higher. So watch these price targets in the 4600s because it does look like we're headed there next. We still need to get above about 45.34 to really get in those 4600s, but it is very likely that is the destination the S&P 500 is heading. So stay objective and make sure you're following the price action and the trend. If you're staying objective in this market, it's been a very easy market to trade because the market has been very technically sound. I also have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions. If you're interested in trying out BANC Trade Alerts, I'm currently running a 50% off promotion for your first month, so you can find out all the details on how to join and more about BANC Trade Alerts in the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.